Hi, this is Randy Finney with Right Side of the Chart, and this is a mid to latest session update for Thursday, April 11th, 2024. I had just fired off that post on Apple. My bad for missing that. That is not something I normally do. I've been covering this stock on a pretty much a daily basis. I cover that and the big Mag 7 with the market indexes all the time, and just took this off the radar, and this broke out right shortly before I got that active trading idea out, and that one just kind of blew right by. And again, you can say what you want. I've been doing this a long time. I put this at virtually 100% the cause for today's rally. Not 100%, but close to it. And let me just go over a couple things here. So first of all, you did have others such as NVIDIA and all that at support recently, and Apple. And I covered that yesterday, almost every day this week. NVIDIA had to break, was at 840, didn't take it out. But the big one is Apple. And so I gave you a link. If that post I got out to you, this is where we were last time. And if you remember, we were short the Qs, short Apple coming down into that. And that was it. And I didn't like it at the time, but we had hit... when I say I didn't like it, it just felt icky because we're in a downtrend. But that's when I like to buy. And even if it doesn't feel good, it was a 10 on a scale 1 to 10. You had the biggest correction of the year. We had hit the 200-day moving averages right here, which was also T2 on QQQ. We had almost all the other things at that time. Microsoft hitting the 200, NVIDIA coming down to my purple lines, Apple. And so anyway, that's what happened then. And so that was obviously one of the best entries on Apple. Was pretty much all last year. Went up, put in that divergent high. And so why can't that happen again? Let me talk about that. So again, I usually don't throw out apologies because I don't take credit for any of your gains, and nor do I share in your losses. I just can't believe I missed that. I've had this trend line. I have this bullish falling wedge. We had one false breakout here recently. Let me get my circle tool. We had one false breakout, but the trend line remained very, very valid with a lot of reactions. Divergence has been building. And more importantly, this is my favorite swing trading time frame, 60 minute. You can see that. You can see the volume, the impulsiveness of Apple. Again, it would have been the other way on the active trade today. Had I been watching this one, I should have had a price alert set on it. Anyways, it's but here the thing is, we move forward. And that's why I want to do this video. I want to share my thoughts. So as I said in that post I just fired off to you, each of this is the chart I've been using forever. You've got the resistance levels there. This was a big support level. It was 180 was a big support level back then because we were holding. It was resistance in here. We had one brief period where we broke above it. And so that is a massive, there's a potential target I could easily see us getting to in the next, like I said, I gave it about, I think within the next week, it'll fail. If it failed tomorrow, wow, that would be just something. But to fail the breakout now, we really still have to go under that 166.61. Again, that's a level that has not been modified. That was created back in October of last year before we even got there. And then came the breakout of the downtrend line. So can this happen again? This right here? Sure, anything's possible. But do I think it's going to happen again? No. And I'm going to get to why. I couldn't post that weekly chart in the post I just got out to because it just won't. It goes back so far in time, you can't really even see the breakdown unless you zoom in. So I'm going to get to that in 1 second. So that's that. I don't know how long they're going to buy. Not today. I don't know. Today is pretty, we're at resistance right now. And we're also a hair above right here. This is a 60-minute chart. You've got some reactions in here, reaction high. It's more of a resistance zone there. You've got these are older lines. I just fired the post off to you. And I can tell you right here, this is a big support shelf right here. This is the biggest resistance I see, and I think that lines up with what I had on the daily, so about 180. And so let me just try to quantify it for you. That's another 3%, not that much. It could certainly carry the indexes up, But based on everything I've been saying the last couple of days, I think this is a breakout. I think this is going to go down, if I'm right, is one of the best bull traps in a long time. Again, it's legit. It's a breakout. A breakout until unless fails is bullish, so take it for that. But if it fails, I would put it about a 10. And when I say fails, by the way, I want to see us go back below. We still need to take out that 166, 61-ish. That's that major support level. You know, we had reactions all the way back here, mainly in the last year or so, 2023. It was big, to me, a very big level. We had a testing it there, broke out, back tested, came. I had really a zone. I had a line here at, even back then, 170, 37, and then the lower level. And obviously it's the lower one that needed to go back then, never did. And so that's it. So whether we do this, or just turn around next week and drop below it, that could come, again, as early as next week, or it could come 6 months from now, a year from now. That's a very important level. We could go to new highs and back down. Now, won't be riding Apple short if we go to new highs. I don't have a position in Apple personally. But I am still sitting tight on my QQQ swing shorts, absolutely, right now, because I think this is a breakout that's probably going to fail. Okay, let's talk on that. Why? Why is it going to fail? Okay, a couple things here. The PPO, unlike back then, when we hit it right here, the PPO signal line, you see this negative 1.18. You'll probably see this line going back to my chart all the way back here. I've had it, well, let's see when I put it up there. I don't know when I put it. Back in 2022, June of 2022. Why do I have a yellow line at negative 1.18 on the PPO? Because to me, that's the delineation line that delineates bull and bear trends on the PPO, using it as a trend indicator, a lot like what I've showed you recently with QQQ, getting that bearish crossover on the weekly. And again, don't think for a second that doesn't factor into my why was I more bullish there to cover shorts and go long than I am now. That's a big part of it, that recent sell signal on QQQ that I've highlighted, a trend indicator change, I should say. Now, the way I use the PPO as a trend indicator, I use the signal line. I always say this often. It's the last of the two to cross because the blue line, the PPO line, responds to prices faster. The 9 EMA is the 9 EMA of that line. So it's and from my, it's just something I developed over the years. So I like to use that. And you'll see there, and you can tweak it when you're above it, which is most of the time. Most of the time, Apple's in a bull trend, right? And you can go back and then typically it's telling you that's a bullish trend. But when you cross below, which we did back here, we had a bearish crossover. We were below there. That was one of the biggest drops in years. We spent quite a bit of time below it here and here. Those were some of the biggest drops. And you can see back then, that's when we went long right there, and you can see we had the positive divergence at that support, and the PPO had a couple brief whipsaws down below the signal line, but it was well above when we took that long on Apple in the market right there and covered shorts. This time around, we are clearly below there. So yes, we do have positive divergence, which again has the potential to play out for a lot more. This is usually my favorite swing trading go-to setup. As much as I love the 60-minute charts, you guys know I talk about those all the time as one of my go-to swing trading timeframes. The daily is even better for longer-term swing and trend trades. However, you have conflicting evidence. So you have this, and what's going to happen if I'm right, and Apple's in a bear market that has a lot more downside to come. When I say that, you can play the game of a 20% drop. Apple's not down 20 yet. It's certainly in correction mode. But remember, Apple peaked back here. So it's been, you call it what you want, but if you bought back there, that was in July last summer, you're down 16, 17%, and it's been over a year. So it's not just dead money, it's been a losing money trade. But again, let's just talk about what's going on here. So this is certainly below that bull bear delineation line there. And now more importantly is you have the big, I know this is a busy board here. Let me see if I have a clean board for you. Let me click over here. This is a clean, I'll clean it up here. So I have that little divergent high. But then this divergence here has been building, going back to this point. In fact, when you start to see this divergence goes here on the daily chart and it spans for a year or more, I like to then flip over to the weekly. So we're going to zoom in. Before I zoom in, this is what I was talking about in the post. Now, I've covered this quite a bit recently, but not on a daily basis. Not a whole lot changes on the weekly or monthly charts, so I only periodically update those. But this purple line here, I've had it forever and a day. It is the secular bull market uptrend line for Apple. And remember, Apple is no longer the top dog, but for many years, even decades now, it has been the leading stock, the most widely held, the crowd favorite. It was the first 1 trillion, then the first 2 trillion, then the first $3 trillion company. And so don't underestimate the importance of Apple. And so you can see here, this is just, I know, super busy. That's why if I tried to screenshot this, you wouldn't be able to make anything of it. But I'm zooming in and I'm showing you that purple trend line again that comes off the 2023 lows. So we're talking over 2 decades ago. That's a secular bull market uptrend line. These were technically bear markets. You call them what you want. Technically speaking, if you want to say it's a cyclical bear market, that was a 39% drop in a secular bull market. And so, and you can see here, and I marked this chart up, I shared it for years. These are all the weekly divergent highs on Apple. Every one of them marked, going back to that point in time, even going back before there, that dot-com bubble. Divergent high, 82% drop. Divergent high on the weekly, 42. Divergent high, 62, 26, 15, 16, 45, 32, 34. Well, that was the same one. When we got to 32, we kept going. 34 was the drop. 39, 35 right there. That was COVID, 35% drop. 21 off that small divergent high. But remember, that's DH1, DH2, DH3. So this is kind of bigger picture. The divergence has been growing for years. So it's not as if it didn't play out or say, well, now only the divergence is only giving us. No, that was just, again, we didn't reset the oscillators. This divergence has grown. Then you got a small divergence gave us a relatively small 21% drop. Bigger divergence gave us a 32% drop, and even much bigger divergence. That's why I'm looking for a much bigger 50+% drop in Apple. And I know that's heresy among most people, and especially Apple bulls and stock market bulls. But anyway, we'll see. We'll see where we're at in a year or so. This is when I zoom into that purple long-term uptrend line, which, by the way, has been visited quite a bit recently. So as valid as it is going back to 03, you had the big Q4 of 2018 drop. That was a 39% drop, perfect tag of it. COVID, perfect tag of it. The last, what you want to call it, bear market, or what I call initial leg down in the 2022 bear market, or start of, was 32, right to that level. We hit it again, and then finally we broke it down, as I've highlighted several weeks ago, back in March. There's your first solid red candle. We broke down, closed below it on the week ending February 23rd. Clearly took it out with a solid red candle the following week, and then we're just well below it right now. And we're also below those key 200-day / 40-week moving averages, again, that do a great job of defining Apple. If I turn off all the lines, you'll see that. That's these blue and red lines, 40-week and exponential and 40-week simple. A 40-week moving average is the same thing as a 200-day moving average. Remember, it's a 40 period on a weekly chart. 5 days in a week, 5 times 40 is 200. And these 200s, they do a great job of defining bull and bear markets. When you cross below, you're in a bear market. That doesn't look like a lot. That was 2009, and it was a lot. It was a big drop. I'm using log scaling. And you can see we've been riding them up, but then Apple started to get toppy, and it's sliced through them recently, but it's been above it since this point here. And we've been trading below the 200s for a while. That's why I'm doing this video. There's a lot to this. So I'm seeing and recognizing a breakout, and I'm not a mechanical trader. I anticipate which breakouts will fail, which don't. Hey, sometimes I'm wrong, but you miss 100% of the shots never taken. I wanted to tell you why I think this breakout will likely fail. And again, Apple's been beat down. I said that in the post. I've been talking about it. I covered it this week or last. I said, look, it's due for a a bear market rally. This is the daily chart here. This is just a different board. You can see the positive divergence. You can see the downtrend line. And so when I actually go here, the way I just drew it, we just, we're not clearly above it. Yeah, the day hasn't closed yet. So it is a beautiful bullish falling wedge. But the thing about that is, if the longer term charts play out, bullish chart patterns in a bear market, if again the big level still hasn't been taken out, Apple needs to take out those lows again. It's a purple line on this board here. That was just a cleaner board I'm giving you right here. So that's that same purple level there, and if that goes, it's just going to, like I said, if this breakout fails and we go down and these divergences get burned through, then you will know, I will know at least with a high degree of confidence, we're in an ugly bear market, because to see such beautiful textbook bullish divergences, again, the same divergences that made me buy Apple and go long back then, to see them not play out tells me that's the character, that's the nature of a bear market. Just like in a bull market, bearish chart patterns have a much higher rate of failing. They either don't break out at all and trigger a short entry, or they do. They break down, shorts pile in, but then boom, it goes the other way. So that's that. So you can see again, we're coming off, the bigger, longer term picture is bearish. How far? Like I said, I gave you some levels earlier. I could easily see it, come up here. If you want to take the measured target of the pattern, just take the widest part of the wedge, wherever that is. Call it this right here. Add that to where it breaks out. And look where that brings you. Exactly to where I said is a likely target. So that gives you about, if we can rally into tomorrow or into next week, about 3% upside. And I'm not saying it can't go higher. If it starts to go higher, I'll look at everything else collectively. But as I said in that post, I have a lot of evidence, including but not limited to the recent trend changes. I don't forget, because I don't forget for a minute. I've been probably hyper-focused. Look at the 10-year is doing nothing. This is a good example. Here's that divergence I keep talking about, but it's not playing out. The 10-year bond has had every chance to rally. The auction fell flat on its face yesterday. Remember I told you, I think it was at 1 p.m. We had a 10-year bond auction, and obviously they didn't gobble up the 10-year. We're well into the orange zone. I'll tell you this, if we were up here in the yellow, especially the green zone, and Apple broke out like this, I'd be going long Apple. It would be a trade idea on the site. I'd be covering index shorts, but we're not. We're down here. We're solidly down in my orange zone. And that's another reason why I'm predicting what is, again, a textbook looking bullish breakout. Algos are going to buy, humans are going to buy it. That caused the pop today. And I'll end it here. I've covered Apple quite a bit. I will say that a couple things need to happen. It needs to fail. It could fail at any point. I gave you some potential levels. And the other big one, I told you, Apple, they've already killed the leader. Apple was the leader, was the big dog. It's been the big dog for, 2 decades now, the lead sled dog. And it got put back in the line right now. We know that. And so this is the one that I've been harping on they need to kill. This is the general. This is the leader right here, the 5-star general. And that's NVIDIA. And, so it's that same level, 840. Boom, boom, boom. We keep holding 840. So I have a price alert. It's pretty much, or you want to be safe, just wait for Tuesday's low to get taken out. And when that happens, especially if Apple fails, not just fails, failing the breakout and going below that key support level is really one and the same. Because if it goes down below there, the breakout will have failed. Best case scenario, I'm going to draw right now, guys, another trend line, which I just did on that other chart. I'm going to put this trend line, I'm going to capture that reaction high, and we'll see where we close the day. My guess, we're already at resistance. You've seen it. You've seen the highs for the day, and we'll probably come back and park either right here on that 173.65 support, or even on the trend line. And then what that'll give you, go back to that other board I drew for you. Right there, it's going to give you, right there. It would put us inside. It would keep that wedge intact. Remember, this is a daily candle. We've got 1 hour to go, 1 hour and 2 minutes as I do this. And so they'll probably fade it, park it there. And then, it's still a bullish setup. So And there's a big level right there. This is a clean board, guys. You can screenshot this one. I'd say it's from right there. I see it's a resistance zone. It's so much there. It's like a brick wall, in my opinion, of resistance. You have the 200 simple right here where I'm circling the red line. 200, I'm sorry, the red is exponential. The 200 simple, massive price resistance there. And if it doesn't even get there and does this first, that's get out of Dodge bearish. I mean, it's like short whatever has a ticker. If that happens, I don't, I think it will happen. I just don't know if it's going to happen. I suspect it'll happen next week. But we could do this before. I'd put almost coin toss odds. Again, it's whether we take out this trend line. Now we're at the, we took out that minor, again, 60-minute trend line right here. And now we have that secondary trend line I just gave you right there. If we close on it, then it's valid. If we don't, if we can build on today's gains, it's not valid. Why would I say that? Well, to me, it takes 3 distinct reactions, separate in time to validate a trend line, because any 2 points can be connected at random. So if we continue up today and we close up here, well, I only had 2 points, and then I eliminate this. This is no longer a trend line. Right now, it's a potential trend line. Let me show you one more thing. This is at board 5. I had a note on my Apple chart. Just go to board 5. It's a cleaner board. I probably should have started there. It's the same thing. I have the all the corrections on that followed, all the drops, corrections that followed divergent highs on that weekly time frame here measured out. So if you just look at them, take them collectively, you're talking an average in there is going to be close to 50% going back in time. They've been smaller in recent years, and that may be due to the fact that Apple's grown. It's it's stock buybacks in recent years, so the corrections have been more limited than they were in the past. But again, you can see anyway I slice or dice it, I have it below the primary trend line right there. And then this is my final chart. I'll leave it with you. I hardly ever go out to these monthly charts. That means every candlestick is 1 month. This is as far back as Apple goes. There's Apple's IPO back in '84. And you can see uptrend lines, clean uptrend lines, drops, peaks to high, measured the drops, 59.70. So see, back then, of course, it was a different company. It was a newer company. The drops were all, 60, 70 to 80%. We had a couple there. But this, again, is just kind of the bigger picture. And every now and then I like to go look at these monthly charts, and there's our trend line. So I want to say this, that there's that big divergence that's been building. Same divergence I showed you on the weekly. There was our monthly close. So that was the first monthly close below this secular bull market uptrend line. This is a line that really defines the S&P. It's a trend indicator, that 20-month moving average. But we'll watch it. Can this prove to be a whipsaw? Sure. But Apple has to get it back above there. And if it does, then it's back above the trend line. But again, this was a pretty powerful sell signal. And the fact that it came after a big divergent high says that Apple is probably going down here. And this is still, these are my longer term targets. I've had them for a long time. 134.50-ish, 107, and then ultimately this 59.44. I don't know when I put that there. It's still, no, must be about the same, 66%. It's going to be about a 66% drop in Apple if hit. And I can tell you this, it's not going to play out today, tomorrow, or next week. This is a monthly chart. We're looking at decades of price action here. But what I can tell you, if it does play out, remember, you can see here as you look at these drops, and you can measure them out yourself. I always say this, that stocks tend to fall a lot faster. When they correct, during corrections and bear markets, they tend to wipe out years of gains in a matter of just months, sometimes even weeks. But however, Apple's only going to go so far without the rest of the lot breaking down. Now, some of the lot, that is, has broken down. That's Tesla. Oh, by the way, guys, if this Apple breakout, sticks and goes into next week, Tesla's next. I've been talking about Tesla here. It's got let me go back to the daily chart here. Where are my lines? Hold on one second. There it is. I had to restart the charting program. All right. There's your downtrend line. There's your divergence line. I pointed out this divergent low here. I pointed out Tesla's a trade idea if you wanted to take it at support and or on a break. You got a rally. It doesn't look like much. Tesla's kind of a high flyer. The stock rallied from that point 17%. You've got an even bigger divergent low now. Apple, just remember, Apple and Tesla are they're former Mag 7. Obviously, they're way off their highs. Tesla peaked. But you talk about one that's going to follow, most likely. I would put a high degree of confidence, and you can see it's starting to crack now. In fact, it broke out the other day, and then it came right back down. It's hugging the trend line, and so if you're looking for alongside either a pure play or a hedge to index shorts, Apple and Tesla are the two best looking ones right now, in my opinion. They have more potential than any of the other Mag 7s, even though it's trading at highs. There it is on the 60. You can replicate the 60-minute chart if you want, or just use that daily. So Tesla's about to pop. I have not updated this in a while. I can tell you right there. If this rally gets some traction, right there, I'd say I'll give you two targets, about 183 and 206. But again, I don't trust this rally, this breakout right now as far as I can throw it. You can take this if you want. You can use it again as a pure play trade, a hedge. If you're bullish, you got to love Apple right now. Like I said, it's based on everything I showed you. And with a stop below the recent lows, that's key support. Same thing with Tesla. I'm going to wrap the video up here so I can get it out to you before the close. And I will most certainly follow up on this tomorrow. And then we'll see how things go next week from there. We're still comfortably in the trading range on QQQ, so really no threat right now. Well, you know what? No, there's that downtrend line. Yeah, that's not looking great. Remember, I didn't want this downtrend line violated. Okay, so that's not looking great right here. But as I said in the recent videos, this is where, if we can take out this level, we're probably going to pop the high. So keep that in mind as far as if you're swing trading, any swing shorts. Let's see how we close today. Right now we're a hair above that trend line, but this is a 60-minute chart. This last 60-minute candle closed right on the trend line. This one's still in forming right now. There's your next resistance, about 447. And then that if it gets taken out, remember that's our previous reaction high, then we have one there, and then the only one left is right there. So that's it. And we'll pick it up. If there's anything big happens before the close, I'll give you another update. What I'd love to see to keep the bearish case alive and well is a rejection here with the 60-minute candle closing back on or below. But as I said, we go up there, you might want to start, making sure your stops are in place. If they come and get you, this is how I trade. If they come and get me, I can always get back in. It takes a couple clicks of the mouse. Commissions are virtually nil nowadays and free at a lot of brokers. And so it's not a big deal. All right, guys, I'm going to wrap it up here, get the video out to you hopefully before the close. This has been Randy Finney with Right Side of the Chart. Have a great day.